Okay, we are live. Welcome everybody. Welcome to this Thursday's happy half hour. I am I am David Shakavich, president of Carolina Retirement Planners. For those of you who may are new, I'm accompanied here by my daughter Sam Shakavich and partner
Hey,
in the business.
everybody.
And we have a special guest today. We have a special guest. His name is Phon Vilayoune. He has a distinguished career in the world of investments. We're going to talk about that in a little bit. For instance, how do you manage a $15 billion portfolio and some new things as well. But we always like to start with a little bit of fun and uh, you
Well, and
know,
also with us as always is Amy, our director of client fun, working tirelessly behind the scenes, making
Hello.
sure that all of the Zoom and Facebook and chats are interfacing correctly. So
Yeah, all the crazy stuff that it's like, wait, what? Yeah. And with that, I gotta go
Magic
back to work. Magic. Magic. Bye, guys.
and also as always, if you can't we can't see you, we don't know that you're there unless you type into the chat, so we'd love to say hey and know that you're here joining us this afternoon.
See Bruce.
yeah, and it's also we always like to say what day it is, and today, I know at least for Sam and I, today is a day close to our heart. It is National Mutt Day, you know,
Like a
to
mutt
celebrate
dog
those
mutt.
dogs who are of mixed and unknown origin, you know. And for instance, uh, Sandy, my wife, and I, we have a little dog named Dogma, and he is allegedly he was a rescue dog from a breeder, didn't work out. Who knows? But he is allegedly a peekapoo. You know, somebody bred some poodle in with a Pekingese, trying to add some intelligence to the Pekingese. However, it didn't work out that way. You know, but he is cute as can be. And I know personally, I walk him downtown in Wilmington, and girls come up and they say to me, they say, "Oh, how cute!" And I say, "Well, thank you, but say something nice about my dog. He gets jealous." I get a lot of mileage out of that. And,
You think that he's lying about that, but he's
That's
not.
hilarious.
He's not. He uses that line a lot often, probably daily.
Pon, do you have a dog or any pets?
No, but my wife and I are talking about getting a dog. It'll be our third kid. We have two young boys and I get another kid via a dog. I used to have a Labrador when I was younger, a black lab. So
Mhm.
Ooh, house of boys. How old are your boys?
5 and 6.
Oh, you
Oh,
got your
that's
hands full.
cool.
Yes.
Oh, yeah.
Yeah.
I had two girls, and they're, I watch families with little boys, and there's just a whole different, let's say, degree of energy, put it nicely, but it's just
Yes.
and Sam, you have a delightful mutt also, don't you?
I do. I do. Her name is Jessie. She is, from what I understand, she's got some schnauzer, some poodle, some terrier in there. I don't know. She looks kind of like Toto, depending on how, if she's had a haircut recently. Uh, and she's actually about to turn 13. She does not act like it, except for the fact that she is almost entirely deaf. So she can't hear a dang thing except if I clap, she can kind of hear that. But she is you know, our only, child right now. So she's the only mutt in my life. Um,
And I can see that Bruce has joined us.
mhm,
Our own, of course, Kristen is here, right in the next room, actually.
mhm.
Amy's mother's there. My wife, my delightful wife, is probably sitting there with Dogma. Ed, it's good to see you joined us.
Ed,
Mary, Al,
hey
uh,
Al.
Cindy, Alexandra, and Rick and Marcy are here as well. So it's just good to. But we ought to uh, we ought to maybe plunge into today's topic, because it's not often we get a guest like this. And I'm gonna share my one of my little screen here. I've put just a few slides on to kind of help gather us along. And I'm going to start here with a little bit of info on Phon. This is sort of a bio, and I'm going to brag on him a little bit myself. He and his parents arrived in our Midwest back in the late 70s when he was but a young tyke. He went on to graduate from the University of Iowa's Business School, and he was, in fact, the top of his class at that time. And then he started a career in investments and working with bonds. He worked with Principal Global Investors. He won an award there a management award there in 2006. He went on to work in Saudi Arabia with the Saudi Arabian Bank. I'm sure there's some good stories there. Came back then to work. I
survived 4 years.
Worked for Bloomberg in New York City and Sydney, Australia, and then decided to come back to his Midwest roots, if you will, and joined a company called Security Benefit. Many of you may know Security Benefit because they are one of the companies we use. One of our companies when we do fixed indexed annuities and life insurance. They're one of the groups that have some really good products. And he joined them for several years. And then a couple of years ago, he actually struck out on his own, and he formed Veta Investments. And he's in fact partnered with AE Wealth, who we use as a registered investment advisor, and we'll get back to that. But I just thought I'd brag on him. It's a pretty awesome resume, and
you've lived all over the world too. That's really cool.
Yeah, I feel really fortunate, been able to work in a good industry and been able to work and live around many parts of the world. Very fortunate.
And he's left a string of awards behind him. This is a press release from Security Benefit. It's hard to read here, so I blew it up a bit. And this is from 2018. Security Benefit announced that it has earned the EQ Derivatives 2018 Insurance Risk Management Team of the Year. So they were recognized by their industry as number one in the industry that year for its risk management programs, and they're determined by a combination of market surveys, peer assessments, and qualitative assessments of the nominees. And here's where Phon himself says, "We're honored to be recognized as Team of the Year." Security Benefit Derivatives team, which managed 16 billion in assets. I mean, that's a big set of assets to deliver. And here is the chief investment officer there saying the work of Phon and his team is integral to our mission of helping the clients through retirement. And we've honored that team, and we're honored that team's outstanding work's recognized. I guess the main thing as I'm trying here is say, boy, this guy's left a trail of awards in his wake, and now and I'm happy to have him on here. Phon, tell us something about your experiences in Saudi Arabia and managing big portfolios and with Security Benefit. Let me kind of turn the floor more over to you.
Sure. Thanks for that.
Dad, we're tired of hearing from you.
Yeah, I know.
Thanks for the great.
I'm tired of hearing from you too.
I think the biggest kind of the lessons I learned from managing large portfolios at insurance companies and banks are like in almost anything else, you need good experience and you need good people. Luckily I was able to build a good team. And once you have a good team, you need to have good technology and process, probably similar David and Sam, how you guys run the business. And just work hard. And Those are the key qualities of running a large portfolio. Some of the advantages of running a large portfolio is we get to trade directly with Wall Street. That's a big advantage. We can trade custom options, custom securities. We have access to like private debt, private equities, private CLOs, and custom derivatives. So it's some of the advantages. We have and my team, like we did the whole thing. We did like trading, analytics, back office, front office. We need kind of the whole suite. So very similar to running a business. It's very similar to running large portfolios. Combination of experience. And the world's moving much faster, so you need a lot of mathematical and technology skills to keep up with the world. So we applied a lot of math and technology to the portfolio. I think we had over 10,000 positions in that $16 billion portfolio. So we had to analyze each position every day. So yeah, but it was exciting. And like I said, it's always
How would you like to get your fidelity statement? and there's 10,000 things in there,
Yeah.
You can see the fun it would enthrall. So
at security benefit, like my team and I were hedging the risk, hedging the product risk, like all the annuities that security benefit selling. My team was hedging all the annuity risk and also hedging risk on their balance sheet. There's more of a risk management.
When you say you're hedging the risk, you know what that means, but I know a lot of the folks on our happy half hour today are probably, they say, well, I'd go out and trim my hedge periodically, but this is sort of a little different.
Sure. So like when you sell an FIA, the client gets a return or crediting method based off some index. So the insurance company needs to hedge that future payment. So then my team will go out and buy an option on the S&P 500. If the S&P goes up, we'll make money on the option, and then the insurance company will take those gains and credit it back to the policyholder for the annuity. So that's what hedging is from an insurance risk management point of view. And that's kind of opposite. Sorry, go ahead, David.
So your team actually, I often describe to people, they take the interest off the bonds and things in the portfolio, and they use it to buy calls or options on the market. And if the market goes up, they put the winnings back into the portfolio.
Exactly. Yep. And then in Saudi Arabia, which the last article applies to, is in Saudi Arabia, we were more risk taking. So we were in Saudi Arabia, I was helping run the proprietary trading team. We were one of the largest risk takers in the Middle East. If you remember, oil prices were still above 100 in 2009, 2008, after the global financial crisis. So the banks in Saudi Arabia actually had more liquidity than the banks in Europe and United States. And we were buying a lot of cheap assets and buying a lot of distressed assets. And then we were also hedging some of the future tail risk in case the market kept going down. So we would buy assets that we liked. Then we would also try to find cheap hedges in case we had another coronavirus event or we had another global financial crisis, which applies a little bit more to what the last article kind of speaks to.
So in that case, when you say you bought a cheap hedge, that's a hedge that if the market falls, I'll make money.
Or it would cover some of our losses on the long side. So we were always looking at our long, short, our net position. So if the stock that we like, we want to keep it, we did our homework, we don't want to sell it, but we thought there might be some future global pandemic or future crisis, we would go out and buy a put option. And then like if the market went down, we would have a gain on the hedge, and that would cover some or all of our losses on our long portfolio.
And then you gave me kind of a little example of that, I think, that we put into the little slide deck. Let me see if I can bring that up.
Yep.
Would this be a good time to look at that one to kind of explain people how the mechanics of all this works?
So this was an extreme example. This was almost a perfect trade, a perfect hedge. So a lot of the trading community is familiar with Bill Ackman. He's a big institutional hedge fund trader. We traded similar to him in Saudi Arabia. So here he essentially bought he had about a $5 billion portfolio of equities. And in February, he was concerned about the global pandemic. If you recall back in February, a lot of people didn't think it would be that bad. There's still a lot of questions in February and January. He decided to hedge the risk, but he didn't want to sell all of his stocks. So he decided, in case he was wrong, he wanted to keep his stocks. So he bought some put options on high yield bonds, which is very similar to buying put options on stocks, just to cover his risk. And that option costed him like about 27 million a month. And if you take 27 million times 12, that's about 300 million. And you take 300 million divided by 5 billion. Worst case scenario, he would have lost 6% if nothing happened. But if something did happen, so he kind of got the timing almost exactly perfect, and the sizing, he did a very large trade. So as everyone remembered, during March, the market went down 20 to 30% in 1 month. So that's how he was able to get at such a large.
So
hedge
his
gain.
5 billion here fell to something like 3 billion, or
Yep. Yeah, about 3 billion. He lost about 2 billion. So 3
so
billion.
this went down to 3 billion, but the hedge here that he bought went up
To
probably
about
2 billion.
billion. Yeah.
2 billion. So the 6% he spent to cover his bets paid him $3 billion, made up or went up 2 billion, right? So it paid him the money and covered the losses he would have made here.
Yep, and that's what
Wow.
and that's what institutions do. Like, that's how I grew up trading at principal and security benefit and Saudi Arabia. It's like, how do we hedge our long portfolio? And then the other key discipline is he took off his hedges during the panic days to monetize his gains. And then the other key discipline is he had reinvested his hedge gains back into the stocks or bonds that he liked.
So
Yeah.
he had the 2 billion winnings here when the market fell, and he put them back into the market when it was down.
Yep.
And then
Then,
what?
Oh, wow.
Yep. So at the end of the
And
year,
then
I
the
think it was up
market
like
came back.
50, 90%. Yeah.
The
So
market
he
comes.
out even more ahead.
Yep.
Yeah, now
Right?
he's got
Even
more than
appreciated.
7 billion in the end.
That's called win-win.
Yeah.
And I wanted to bring this to folks because you hear all this, but you don't really know how it works. I mean, I always hear about hedging and options and all, but this is literally how the big boys do it, and this is one way. Here's an example, a guy that did it almost perfectly during the recent disastrous downturn, and it's the sort of thing that Phon's been doing as well. Now, Phon, you also, a couple of years ago left security benefit. Why did you do that, and what did you move on to?
Sure. The two main reasons was we wanted to help other insurance companies. So after my team and I won the award, got a lot of interest from our peers to help them. And, obviously we couldn't help them because, the security benefit wanted us working for security benefit. And the other reason was I wanted to help advisors and kind of the individual investor through advisors. Cause I made and saved a lot of money for institutions. Kind of always want to do it for myself and advisors. So those are two main drivers. And that's kind of why we partner up with the founders of Advisors Excel and AE Wealth. I was like, hey, want to help you. I want to help the advisors on the platform and also want to do,
And
the
what
insurance
company,
stuff.
you went out and created a company with AE Wealth. What's the name of that company?
Yeah, it's called Veta Investment Partners. It took me about 6 months to figure out the name, but it's a derivatives term related to volatility and time. And it starts with a V. My last name starts with a V. So that's why it's called Veta Investment Partners. And I really wanted a company with partners because, it's really about partnering with people. I think we have a, pretty good partnership started with you, David. And so yeah, it's all about partnership and the human relationship too. So yeah.
And how many people are on your team?
Usually 10 plus. I say usually 10 plus because we have like interns coming in and out. So it's about around 10, and we're a growing company, always looking to hire. It's about 10 people, all
You
based in
have a
Kansas
fairly
now.
sophisticated set of software that helps you with this, right?
Yeah, we built our own technology. We have over 1 million lines of code. That's one of the reasons why we won the award at Security Benefit. Like I led the team to build all our technology and processes internally. That gives us the edge. Obviously you also have to hire and train smart people. Yeah.
So how, if we're doing, when you at Security Benefit and other places, you're routinely moving billions or working with that size. How are you able to bring that technology down to those of us who have less than 15 billion? We might have 150,000 or something.
Sure.
What is it? What kind of tools do you use, or how are you able to do that?
Yeah, we did a lot of work, and initially we tried to put individual options into portfolio solutions for advisors, and that was just too hard from an operational point of view. And that's the advantage big institutions have. But we did a lot of homework, and we found out there's a lot of innovative ETFs out there that have derivatives in them. So that gives my team a big advantage. We know how to analyze derivatives. We know how to analyze ETFs. So we built a solution which is called Smart Veta Hedge, which is an ETF solution combining traditional ETFs and more innovative ETFs that have derivatives in them to do similar strategies to what we talked about, similar to Bill Ackman. Obviously not to that extent because he used leverage and had custom options, but we're running a live portfolio now. So when the market's down 10% or 5%, like we're down much less because we have similar hedges to what Bill Ackman has. Again, not at the extent of what he did, but very similar strategy, but using liquid ETFs that are out there. So very excited that we were able to bring out the solution and manage the portfolio live during this year.
Yeah, I like to say he was able to go find, you often hear when people are building cars or airplanes, it takes all this special stuff, and then someone figures out how to do it with off-the-shelf parts, and you're able to do it, cheaper and in a sense, I think Phon and his crew, if you look at the inside of what he's got in his portfolios, like I have, he found some commercially available hedges that you could buy and sell on small levels, and they were much more fluid, and he put them together and got the same effect that he did with the larger, working with the larger portfolio. So it's pretty cool stuff. It's pretty,
Yeah.
we don't want to
Like,
sell stuff on the portfolio, but if you have an interest, you give us a call or drop us an email, and we'll be happy to take you through some of those. I have some simple ways I like to explain how Phon does it, but it's great having this as another tool that we can bring people for part of their investments, because it's who knows what the future brings, but it's nice to have something that's kind of doing a little more protection on the downside, or even learning how to take advantage of it. So
yeah, like the biggest thing when I was running the large portfolios is we could sleep at night knowing that we had the hedges on, and like we were comfortable, like we're not gonna participate in all the gains, we're gonna lag on the upside, but we knew that, and but we feel very comfortable sleeping at night. And then we knew that we could take advantage of any opportunity, and we had the discipline to take the advantage of the opportunity, because many times you have a big gain, but you got to also like take profits on your hedges and monetize it like Bill Ackman did. Many people don't. That's the other big psychological and discipline that you need. So yeah.
I know when we talked some time ago, you mentioned how you almost have sets of rules. If the market drops 2%, you do this. It drops 4%, you do this. And the rules are big. You got those things that basically go up if the market goes down. Now you sell them and buy when things are low.
Yep.
But you need the math behind that. I have the engineer in me. I can see you need to know you need to have a set of rules, probably driven by computer, that gives you some indication as to how much to do and how much to send. So,
Yeah.
so how are we doing for time, Sam?
Ooh, it's 4:55.
Okay. Phon, do you have any last things or anything else? We do a drawing for wine here at the end. Any closing thoughts or anything like that?
Yeah, I just appreciate everyone's time. And, like I said, I always tell my team, feel very fortunate to work in this industry, and feel very fortunate and honored to manage money for institutions and advisors and their end clients. And it's a huge responsibility, and we're going to do our best for you. And, my money's in it, and my money's, in Veta, and I think everything's aligned. So
we are great, happy to have you as part of our team, and your options is something we can bring to our clients. So again, I just want to give everybody a flavor of how the big boys do it. If you want more information on Phon and the strategies he has, give us a call and we'll set up a time when we can get on a one-on-one or a Zoom call and go over it. So, but Sam, we're going to turn it over to Sam, because she's got the fun part where she does the.
I do. And I just want to say before I do this, that Phon, it is really cool to have an opportunity to hear more of, for lack of a better term, your origin story, to hear, all of the cool things that you've done that led you to this point. I think you're awesome. So it's been a pleasure to get to know you.
I do too.
Likewise.
It's very impressive. Yeah.
I think you're a real cool guy. And just outside of the investment strategies that you've developed. Okay. So for those of you who may not, and Phon, who may not recognize my jar here, each week we give away 2 bottles of wine, and we ship them directly to your door from a local bottle shop from Fermental. And to enter my drawing, all you have to do is we have a little Facebook event each week, and you just have to say, yes, I'm going to this event, and we'll get you entered in here. And if you share that event with a friend, we'll give you an additional entry into the wine drawing. And if you're on our email list, we'll shoot you out a few emails to let you know what our topic is. And if you reply to that email throughout the week, we will also get you into this wine drawing. And if you share that email with a friend, and you'll have to let us know in that case, we'll give you an additional entry as well. So without further ado,
almost a drum roll. I don't know. Is there a drum
I
roll?
know we got a drum roll. Our wine winner.
Miranda has added a drum roll here.
Yeah.
I know I can do a drum roll here.
Yeah. Our wine winner this week is Buck G. Buck G.
Congratulations.
So congratulations, Buck. You are our wine winner this week. Amy will be in touch to coordinate getting those 2 bottles of wine shipped to you. And for everybody who entered who did not win, keep on entering. I love to put your names in the jar, and we love to give away wine, and we will continue to do it as long as y'all keep sending in entries to us.
Yes. We will. We just like to give away wine. Let's just be honest. I mean,
It brings us a lot of joy.
it really does.
Oh,
It
we
really
will.
makes us happy. Yes. Yes.
Well, we will see you all next week, and
Phon,
have a
thank
good.
you. It was.
Thank you again, Phon. It was
Wonderful.
Thanks,
Sure.
Phon. It was great
It was
having you.
really
Maybe
good,
maybe sometime next year we'll have you back. You can give us the latest updates. And
Sounds
cheers, everybody.
Cheers.
Cheers.
Yes. Have a great week. Take care.
Thanks, everybody.